TurboTax doesn't catch this mistake, which could cause you to pay tax twice, and it's not your employer's responsibility, it's not the IRS's responsibility, it's not even your brokerage account's responsibility to catch this. It solely falls on you, so let me show you exactly how to fix this. Okay, now we're going to address ESPPs and talk about how those are entered into TurboTax. So the nice thing with ESPPs is that you don't actually have to report your taxes until you sell. I'm going to assume that you've already entered in your personal information, so let's go ahead and click in personal and personal income, select I'll choose what I work on. Now it's very common for ESPPs to have either a discount or a look back, and those are awesome benefits. Unfortunately, those are going to be taxed at ordinary income rates, and so those are going to be reported on your W-2. So let's go ahead and come down here where it says wages and salaries. So let's go ahead and click subscribe. Now I'm going to assume that you've already entered in your W-2, but let's go ahead and take a look at this. Go ahead and select review. This is just general employer information, so let's go ahead and click continue. Now what we want to pay attention to here is specifically box number 1. It should have your salary and that look back or discount, if applicable, reported in box number 1. Now because ESPPs are a qualified equity plan, they actually aren't subject to Social Security or Medicare tax, also known as FICA tax, but you should only see it reported in box number 1 in addition to your salary or any other bonuses that are taxed at ordinary income rates. You may be a little disappointed in the amount of taxes that you owe this year, but the good news is that it might not be too late for you to actually lower your tax bill. But CPAs and TurboTax tell you how much you owe, but the goal is actually to owe less. That's why I created my firm TechWealth to specialize in owners of equity compensation to minimize taxes and optimize your equity. So if you'd like to work together, more information in the description below. Let's go ahead and jump back out here to personal income. I'll choose what I work on, and we're going to scroll down to the investment income portion, and underneath investment income we're going to see something called stocks, cryptocurrency, mutual funds, and so on. Let's go ahead and click update there. Now you know you're in the right place because it specifically mentions shares from employee stock purchase plans here, or ESPPs. Now if you scroll down, you're also going to see that this section covers these forms and files. Form 3922 is specifically and solely only for employee stock purchase plans, so that's another key that we're in the right place. We also know we're in the right place because 1099B, which you should have, and also 8949 and Schedule D. Now I'll show you exactly how those forms are applicable by clicking yes. Now we've got this one selected that says stocks, and again we're going to see the 1099B and Form 3922, both applicable. Let's go ahead and hit continue. Now this page is asking you for your brokerage information, and the reason for that is because your brokerage has what's called the Form 1099B, and they should be sending that to you by February 15th at the latest. If they send it any later than that, then they have to pay some fees. In addition, Form 3922 needs to be given to you from your employer by January 31st. So again, if you're filing before this date, just note that you need to ensure that you have those documents, because if you're filing early, it may be a little premature. So just ensure you have those documents before you're filing. Otherwise, you're going to have insufficient or inaccurate information that you're reporting to the IRS. In any event, it's really easy to just connect your account. So if you want to take that route, you're more than welcome to. For the sake of this example, I'm going to hit skip import. And then it's going to ask for your brokerage information, and I'm most familiar with Tesla employees, and theirs is at E-Trade. So I'm going to click E-Trade, hit continue. Now it asks, do these sales include any employee stock? And the very first thing it mentions is ESPPs. Yes, that is applicable in this case. And in this case, we're just going to say no, there are no more than 3 sales on the 1099B. We'll just keep it simple and hit continue, and we'll enter these in one by one. Make sure that you have your 1099B handy, and we will go ahead and hit continue. Now this next page is going to have some important information on it, and let's go ahead and select employee stock purchase plan, the very first option. But I want to scroll down here because this is where double taxation comes into play, and if you get this wrong, you are going to be paying taxes twice on the same money, and it's not your employer's responsibility, it's not the IRS's responsibility, it's not even your brokerage account's responsibility to catch this. It solely falls on you. So let me show you exactly how to fix this. You'll note that it mentions both cost basis multiple times here. Cost basis is incorrect. Now this is what happens. On the purchase date, your company is going to file a Form 3922, and it's going to report some of the tax information. That form has a lot of valuable information on it, so keep it handy. You don't actually need it until you sell. But again, any discount or look look back that was beneficial in your behalf, you're going to have to pay ordinary income tax on that amount. The problem exists is when your Form 1099-B, which is not coming from your employer, but it's coming from the brokerage account, again, E-Trade or Carta or Morgan Stanley, and they're gonna report a big fat zero as your basis, which is incorrect, especially if you're paying ordinary income tax as reported on your 3922. And TurboTax gets that this is a common and frequent mistake, and you'll notice as you hit continue, it'll ask about the adjusted cost basis. What you'll wanna do is grab the supplemental form and make sure that the basis is correctly reported, otherwise you're paying tax twice unnecessarily. So those are the two places where your gains are gonna be reported, on the W-2 and then also on the 1099-B, which is actually going to be pulled into Form 8949 and Schedule D, and then it'll come through on your 1040. Fortunately, it might not be too late for you to actually lower your tax bill this year. So let's go ahead and click on personal and then deductions and credits. Select I'll choose what I work on, and then we're gonna scroll down to retirement, and then there's a traditional or Roth IRA. Let's go ahead and click start. So with a traditional IRA, you can actually contribute regardless of your income. The problem is that if you make too much, you can't deduct that contribution. So if you think you earn too much, just know you can always contribute, but you just can't always deduct it. So let's see if that's a possibility for you or not by clicking on traditional IRA for both you and your spouse if you're filing jointly, or if you're filing single just under your own name. Now you'll note on this page that it says answer yes if you plan to make a regular contribution by April 15th of this current tax year. So it's not too late to make a contribution and reduce your tax liability, assuming that you're able to deduct that contribution. Go ahead and click yes. This typically isn't the case, so I'll select no. So this is where it asks us how much we actually contributed, and this is where we're gonna play with the numbers and see if there's a benefit, and if so, how much of a benefit we can get by contributing. Obviously, we wanna stay within the annual contribution limits, but feel free to play with the numbers. Let's take a look at the second way that we could potentially reduce our tax liability this year by going back to personal and deductions and credits. Select I'll choose what I work on. Then we're gonna scroll down to medical. Under medical, it says HSA. That's where we're gonna click update. And if you have an HSA that you were able to contribute to for the previous tax year that you're filing for, you may be able to make a contribution here and actually deduct that contribution. Let's go ahead and say that both of these individuals had access to a health savings account. Click continue. We're gonna assume that they didn't use their HSA to pay for medical expenses. By selecting no, hit continue. In this example, they didn't inherit the IRA. And did Olga put money into the HSA this year? Let's go ahead and select yes. And this is where, again, we're going to play with the numbers based on how much we actually have to contribute to an HSA. And if we want to do that, then we can see how much of a tax benefit it's actually going to provide us.